Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com. Welcome back, Washington, D.C. Metro, to Ryan Sloper's Real Estate Radio. And I'm joined today by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder before we get started again, Real Estate Radio is designed to build the Washington, D.C. Metro's market by giving you good free advice. If you ever have any questions, concerns, whether it's real estate, finance, credit, we're here to help. The number is 877-245-2030. That's 877-245-2030. 2030, or you can reach us via the web at realestateradio.dcmetro.com. So I want to jump into this week's Word on Wealth, and this segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. You can go to homegain.com today to see what I'm talking about. It's very easy. All you have to do is type in your home address, and you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So check that out today. It's homegain.com. So, Louis, as I touched on earlier, the big two things for this week that could, if people are looking to lock in their loans or lock in a 30-year fixed mortgage, are the Fed meeting, which is going to be a 2-day meeting concluding with Bernanke holding a press conference on Wednesday, and Friday, the October employment report, which is expected to be weaker than last month's. Non-farm jobs were up 88,000. Last month, it was plus 103,000, so they're expecting only up 88,000. And non-farm private jobs up 114,000 versus last month of 137. Now, these are just estimates, but obviously this is not getting any better. The reports, if they do come back better, they're revised downwards the next month. So it doesn't really look like we're getting any momentum as far on the jobs front.
You're stabilizing at a very poor rate.
Yeah. Yep. And ultimately with I believe that they had some other factors in there because they had a lot of Verizon workers that were on strike and whatnot. But even still, the numbers that we should be seeing to move in the positive direction just haven't been there. It's interesting. Don't you agree, Lois, that it's odd, how much of a push the stock market's had over the last week and a half? And I really can't put my finger on what would give people that.
It's a short-term pop. I think what it is there's the false hope over that the European debt crisis will be solved. And basically, there really is nowhere else to put your money anyway.
Right. Yeah. That was my thinking as well. I would have I don't know. I feel very, weird putting my money in the stock market right now, knowing all the negative stuff that's going on out here. And at any point we could have a huge pullback, which I think is going to happen. It's really, really soon. I think it's only going to take one of these Italy, Greece, because even the plans that they're coming out with, it's temporary fixes, just like here in the United States.
The fundamentals are not there. But what's interesting also is even your so-called safe havens in the silver and gold market, they're so volatile that it actually scares people away.
Right.
Because those markets are relatively thinly traded. And unfortunately, one of the most widely traded market is the U.S. Treasuries, and they seem to be holding up pretty well.
Well, you and I discussed many months ago that, we felt like silver and gold were smart long-term plays.
Well, they are. If you can put up with the volatility in the short term, they do very well year over year. But you can see price swings of 20, 30, even 40%, especially in silver.
Yeah, and I think you have a lot
that scares people away if they think they're going to put away money and they're going to be safe with it, and then it drops 30% the day after they buy it.
Right. Yeah, I agree.
People away.
Yeah, it is scary. And people are, because people want to know that they're going to have the same amount of money that they put in.
Now, the way you look at silver and gold is if you put the same amount of silver dollars in a safe deposit box back in 1960, or you put the same number of paper dollars in there, you'd be 10 times. You'd have 10 times more purchasing power if you went and collected the silver dollars than if you went and collected the paper dollars.
Yeah, and I've listened to a lot of the the richest investors, the wealthiest people that are out there now, and they're even saying, I don't think that this is being publicly advertised, but they're still keeping a large percentage of their portfolio. 25-30% in these type of assets. Gold and silver.
Makes sense to me.
And then long term,
you can't print more of those, and there's shortages of gold and silver.
Yeah, and a couple of those rich had actually made comments that their long term play was when future inflation does happen, that those commodities are going to shoot through the roof.
Right, now those commodities are really, they don't pay any dividends.
No.
And gold and silver, and they're really a store of wealth. They're not a way to make money, and that's, I guess, another reason is people think they put money in the stock market, they're going to make money. But it's similar to the housing boom. If the stock doesn't pay a dividend, there's no income. You're betting on just the increase in the price because the market says the thing is worth more, not because it actually is paying a higher dividend.
Sure.
It's similar to the housing market when you bought a house. And not because you were going to get more rental income or even that the price of rents were going up. Your house is just going to go up because someone else is going to pay more for it. And those are signs of bubbles.
And we've seen plenty of those.
Right.
And
that's what's funny when they claim that there's a bubble in gold and silver. There isn't.
No, not at all.
Very few people even own gold or silver or the gold and silver equities.
And I think you have a lot of like options traders and stuff like that.
It's speculation.
Yeah, exactly. That are getting burnt but for what you're talking about, just long-term plays. I mean, I do agree with you. You and I have talked about the prospects of long-term inflation and how that can affect people. If they were able to secure themselves a 30-year fixed mortgage somewhere around 4% right now, and they had a decent amount of their money invested in gold and silver, they have a pretty good upside long-term.
Well, sure. Also, think about currencies. I mean, most currencies, you mentioned on the show a while back that they have an average lifespan of about 40 years, fiat currencies.
Yep.
Would you rather hold your money in drachma or in gold or silver? I mean, there it's obvious because you know that eventually the Greek currency, if it turns back to drachma, is going to be next to useless.
Yeah, I mean, that was one of the big things that I stated. There's never been a fiat currency that has not at some point become extinct. And I mean, how far that's down the road for the dollar, I don't know. Could be soon, could be, 15, 20, 30, 40 years down the road, but inevitably.
That's your worst case. The best case is you have inflation on that currency.
Yeah, which,
worst case is it becomes worthless. You got to tell the Argentines that. I mean, they had their currencies go to zero.
Right. Yep. I mean, that's scary when you think about it. I mean, and that's why I think, to protect yourself that, you and I have spoke at length about, just holding on to, a lot of people can't afford gold because it's too expensive to get enough of it. But silver is obviously more inexpensive, and people can have that and hold on to that. I mean, that could be literally a bartering chip down the road.
Well, here's the thing: is if somehow gold or silver get cut in half, that would somehow mean that some wonderful economic things are happening in the world, which means your other investments would be going up. So it's really
very, very true. It is. I think that's sound advice, Louis. You're listening to Real Estate Radio. I'm your host, Ryan Sloper, joined by my guest, Louis Cammarosano. We're going to jump into what we spoke about last week, which was the home affordable refinance program that Obama had just came out and was, in the news. Almost all news stations were really pushing this out there. So I really get that this is more of a political endorsement than anything else when I started seeing, all the major stations picking this up, because really the bottom line is how is it going to help you, the consumer? Is it going to do anything for you? What percentage of people are actually going to be affected by this? For those of you who were not tuning in last week, the Home Affordable Refinance Program originally started in April 2009. It's been called by a couple different names. HARP, as in the Home Affordable Refinance Program. It's also been the Obama Refi Plan and the Relief Refinance. And this is not the same as HAMP, which is basically the modification program by which lenders would modify your loan. This is actually refinancing without having to worry about loan-to-value restrictions, meaning that if you owe $200,000, you're allowed now to go up to, 200% loan-to-value, and they're still going to be able to give you a loan. Louis, one of the most interesting things that I read, because I was really doing some digging, trying to find out the nitty-gritty on this plan and how it can affect consumers that do have Freddie Mac or Fannie Mae loans. One of the biggest hangups that I read was that there's a potential that a majority of these loans were actually sold to Fannie Mae and Freddie Mac as credit enhancement features, which would then disqualify them from being eligible for this program. Well, to kind of give you an example, like let's say that the loan was run through a desktop underwriter, which is basically an automated underwriting system, and it comes back as the loan was not underwritten according to the DU Refi Plus expanded eligibility guidelines because the subject property was not identified as a Fannie Mae loan that is eligible to be refinanced with DU Refi Plus. So if it doesn't fall completely under their guidelines, it then goes to a credit enhancement feature, which those loans are then bulk packaged and sold out later. Well, these loans are not going to qualify for this program, so that could have a significant change in the amount of people that would actually be eligible.
Ryan, I appreciate that you've done this research. I just wrote off the whole thing without even looking at it, but.
Yeah, I agree. But, the thing is, Louis, that we want to get the information out there to the one or two people that it may help.
Absolutely.
You know what I mean? And it's not going to be that many, which is why it's really my job to go in and find out who it's really going to help and be able to weed them out and say, look, this isn't going to help you. I would say the majority, I think that there's been some preliminary estimates for the amount of people that it's actually going to help. Obviously, the original was supposed to help 5 million families, and at 2 years later, it's only reached 900,000. And now there's basically, I think, estimates ranging that between 800 to 1.6 million borrowers may benefit from this. I don't think that's going to happen either.
And you just wonder, Ryan, do they think this stuff through, or they just rush this legislation out just because it's politically expedient to do so?
That the latter. And I'm positive of it. And you don't want to know the biggest things is this, and this really upsets me because they came out with this program which is really being put out all over the airwaves and on the news stations. And so what happens? I have listeners calling me asking me, okay, that was great. I really want to see if I can qualify. Do you know that we can't even physically give this loan yet? We can't give this loan because they haven't set up all the parameters on the backside.
See, last week I thought it was plug and play and ready to go.
No, it's not. It's not even ready to go. They said could be late November, early December. So now you got everybody all excited. Right. You got everybody all excited. And now we're not even ready to have this rolled out where people can call in and start the loan process right now.
Yeah, but they got the benefit of looking like they were doing something.
Yeah, and I think that that's more about the whole political thing. Is it healthy for politics? And it is for them. So it's not helping consumer right now who is in need of lowering their payment a couple $100 a month. And that it really bothers me the way that was handled. I would have thought that have all your ducks in a row and then release it to the public so they can take advantage of it right away. Now we're going to be waiting probably 6 months down the road.
Right. If you're going to provide government solutions that don't work, you should at least get them out there and have them not work from day one, not tell you that it's not ready yet.
Absolutely. And, when we come back, we're going to dive into this a little bit deeper. There's just a couple other quick questions that listeners had that we're going to go through. When we come back, we will go over those. You're listening to Real Estate Radio.